Hello everyone and welcome to my YouTube channel. Today we're going to talk a little bit about India. India is always a great promise in emerging economies, and in the current COVID-19 crisis it is important to talk about its challenges but also about the significant opportunities that it provides for investors. When we look at growth estimates, the estimates coming from different analysts for India this year obviously show a massive slump. If we look at the PMIs in April, they were extremely weak, and they showed that the impact of the COVID-19 crisis is very, very severe in services, in manufacturing, and it's widespread throughout the economy. Many analysts are talking about a lost decade for India, and because of the massive slump for 2020 and a weak recovery in 2021. But there are significant opportunities. India, for example, benefits from the weakening of commodities as a big commodity importer, both of coal and oil. There are other significant opportunities that have not disappeared in India. First one is the demographic opportunity. India, unlike China and other emerging economies, has a very, very strong demographic pattern, and that helps in its probability of growing and in its ability to improve its economy further. There is a tremendous opportunity, rising talent, very young population, and obviously a rising middle class that is driving the economy in the long term. Growth, therefore, is likely to remain once the COVID-19 crisis is over, is likely to go back to levels close to 5%, 6%, and driven fundamentally by the industrial sector, a thriving technology sector as well, and the growing middle class. Those three factors are the main, pillars of the growth of India in the future. I think that it's also important to remind people that in the current slump of emerging market currencies, in the case of India, at least the central bank remains quite prudent, and the level of foreign exchange reserves is actually quite decent, especially considering the level of external debt and the fact that the debt repayment ratio of corporates is quite adequate. So the concerns about monetary risk are not that large, and definitely the concerns about a financial crisis should be one of the least things to be concerned about in the following months. What are the things that we need to be concerned about? The first one is monetary. The Indian rupee has been falling significantly, and its weakness relative to the dollar has been very, very evident since the 1970s. And part of it comes from sometimes a very aggressive monetary policy coming from the central bank. It might not be that way now, but it has been very aggressive at increasing money supply and, allowing the government to run a very large fiscal deficit. The fiscal policy is also a risk. We saw how growth stalled very quickly after the wrong decisions about taxation, the wrong decisions about demonetization of the economy, and also after the big problems generated by very aggressive subsidy-driven policies that at the same time increased the taxes to the most productive parts of the economy. So there's been a lot of challenges to growth driven by very interventionist policies. If those change, the path of growth of India is very, very promising. And if the central bank becomes a little bit more prudent and allows the rupee to strengthen and gives confidence to Indian investors and Indian domestic holders of currency to keep those rupees as savings instead of looking at any opportunity to exchange them for dollars because they fear that it will continue to be devalued without a reason, then that added to the strong levels of growth, the increase in financial investment, the increase in foreign direct investment, and the thriving middle class coming from the demographic pattern, all of those factors should help India become a rising star among emerging economies. Thank you very much for following this YouTube channel. Thank you very much for your comments. Please leave them below and look at our other videos. Keep subscribed and keep defending freedom. Thank you very much.